Hello, everyone. Happy Tuesday. I have Alan with me, who is just chomping at the bit to talk about the 5-minute rule and go over stocks and trades. I have the final version of the iOS app in review. So once that happens, we're going to go live with that. The Android version, as far as I know, is still ticking along. I hope you guys are using it. And this demonstration actually will be great because what the app allows you to do is to take a handful of stocks, take 6, 12 stocks, and let the app monitor it for you and tell you when it's time to break out of that range or break out of those 5-minute high and low ranges. I've been watching the market. Here and there, I've looked at option charts as the day progressed. Today was kind of choppy, but I'm also getting back into, I went and I reviewed our very first video this year. And I talked about self-improvement. And so I'm getting back into that. I visited the library today, a couple of books. If anyone recalls the 2 books that Alan mentioned, The Millionaire Mindset by T. Harv Eker and Think and Grow Rich by Napoleon Hill. On my list. I've read them before, but it's time to read them again. I am also looking at Ray Bradbury's 451 just for entertainment. But yeah, I texted my wife and said I'm getting back into reading this year. I tried to do it last year, reading a book a week or 52 books a year. I posted it on Facebook, and I don't think I'm going to do it this year, but it's like a secret goal for mine. I've talked too much. I'm going to throw it over to Alan, and this probably is going to be the most valuable video that we've done. Basically a refresher or this is how you use the 5-minute rule to trade, and it works. So Alan, with that.
Excellent. Hey, one of the books that I really love. Now the thing is that it's called the Trading Bible, and it's by Alexander Taylor. I have read at least 100 books on stock trading, at least. I've probably read over 1,000 books since I was broke. Kind of funny saying that way, but it's true. And the thing is that I read this book yesterday. I read Trader's Construction Kit this morning. So it's a book, I read a book. The reason I say this is that because I'm always learning. And this book was kind of intriguing to me because I read stuff that I never heard before. And I'm going to get into this 5-minute rule. But what I thought was really interesting, that it's the psychology of trading. Do you know? Okay, so I'm going to go through the psychologies of trading, which I've heard these, but I never really, really heard them. Trading with your emotions. You should have no emotions in this at all. You should give a care. It's all about following the 5-minute rule. Following the rule. That's it. It's not with emotions. You never trade with greed. You go ahead and get out of the trade at the first incident of strong weakness. Now this trade is right up here. This is a common thing. 330 is when the stocks tank. Look at US Steel. What happened? 3 o'clock was the high. 330, it dropped like a rock. So you get out. Don't hold overnights. Taking unnecessary risks. Making too many trades. Improper profit and loss comprehension. Fear. fear to fail. You were biased in what you're thinking in your trading, bias and overconfidence in your trading, bias in confirming your trades, buying obsolete strategies. So that means you don't have a strategy. I'm giving you a strategy. This strategy took me forever to figure out. Never yet seen anybody have it quite that way. The closest one I saw was Oliver Velez, but he did it on 1 minute. Bias and avoiding losses. Trading without a strategy again. Lack of money management. Spending too much money. Wanting to always be right. And then this is the one this one hit me like like a brick hit me in the head. A fear to succeed. This is where those books come in that I talked to you about, Brian. If you sabotage yourself and you don't succeed in trading, it's because you don't want to succeed. And you sabotage yourself every chance you get so you don't succeed.
Yeah. One of the books I got, the 5-second rule, transform your life, work, and confidence with everyday courage and the wisdom we're born with. So yeah, I'll be the first to admit that I am a very emotional person. And throughout this, or the more that I use this app, the less emotional I get, because it's telling me what to do. It's not me saying I want to do this. It's the app that's doing it, and the app, your app doesn't have any emotions, so it just goes based on rules. So,
and what I found reading this book, strangely enough, or no, it was the Creator's Construction Kit, talking about floor traders, is that's one of the strategies they use on the floor of the New York Stock Exchange and in trading groups, is that they go ahead and use this type of stop loss. So this is unique. And you see that green line there that Brian drew. When you get into that trade, which would have been somewhere right around 11:22, you set your stop loss underneath the green line. So you got two options. One, you go ahead and get stopped out, or two, you make a lot of money. The 24 calls, we're trading at $15 a call, I believe. That means 50 calls was $600. And that 24 call, I think, was going for $5,000 at the end of the day. I'd have to look it up. And you'd say, how do you know that? Because the thing is that I jumped in on it. So let me go look. But the point of the matter is, oh, you got it up there?
Thanks.
It might have been the 2450 call I'm thinking of. I'm bringing it up right now. The 24 call. Oh, it was $26. So it was the 2450 I was thinking of. The 2450. The only reason I know, because I went ahead and put in a buy order at 50 times 16. So whatever that is.
So here's your 11:30 when it broke. Trading at
$800. $800.
23.26. So $25. So $500.
No, it would have been $800. So that's the 2450 calls. And the last trade was at $72. So that's $3,500. So $3,500 minus $800 is a $2,500 profit, all using this app. I'm gonna be honest with you. I actually did not. I wasn't filled at 16 because I dragged my feet. So, but the point of the matter is that I had it on my phone. I didn't react fast enough because it was late. It was late. It didn't trigger for. When did that trigger? That trigger was at because it triggered short at 10 and then 11:35.
Yeah, 2 hours.
But look
after
at that. But look at that right there. Look how accurate this app is. It told you when to do it. Yeah. And technically, you almost didn't even have a short in there, but you had a short for 1 bar at 10 o'clock. Now, the interesting thing is that what you have is that the market was going up, so US Steel followed. But if you go back to the option volumes,
Yeah.
I mean, look at that. Look at that thing at 23. That's what you want, is you want someone deep in the money. So the 23 is what I call deep in the money. So let's go through the terms one more time. The two outer ones, the 4,000 is the 4,834 is the deep in the money. The 2350 and 24 combined at 24,000. I'm sorry, 5,000 is going to be the hammer, and then it's going to follow through to 25. You see that?
Yep.
So any trade, you notice you don't. You do actually have that on the other side too, though. Yeah. So there was. You did have. It could have gone either way, but the momentum brought it upward. But the key thing is, and this is what I say. What is the bottom line? The bottom line is your left number. The bottom line is the number on the left, which is today's volume. See that? You notice today's volume, there was no puts.
Right, in the money, yeah.
Yeah, or anywhere really. I mean, really, you had a 24 and 23. Now, this is a very important lesson I'm going to go ahead and teach you right now. And this is really important. Unless you got a stool, that means you got 3 legs. There's never a trade. So you notice you got in the money, you got a hammer, but you got no follow through, or any way you want to put it. You might have, you don't, and even a hammer, you don't really have anything of any volume there. It's only 1,000. Look at the 2 over there. Your volume was huge on the 23s. You got 48.34, you know.
Yeah,
so
it's almost a 4-to-1.
Yeah. So, you know, again, MU, let's look at MU. Now, I try to post my list daily. I'm going to make sure I get back into that. But the reason I post a list is that I find certain ones really work and certain ones don't work. For example, Google don't work on certain days. Google, it would cost you $2,000 to get into a 1 contract. To me, that's not a trade. That's a gamble.
Yeah. Google's your Friday trade.
Yeah, but and again, I keep my finger on it. But look at this one here. So your in the money is at 90. Your hammer's at 95. Then it's going to go to 100. You see that? You see how those numbers stick out? Your highest number is always going to be the hammer. And the large number, when it gets down lower, is going to be where it's going to follow through to. Now,
I was going to say, that's what's so good about Fidelity, is that Fidelity highlights these numbers for you. I mean, they basically slap you in the face with, these are your biggest numbers here. So it's
and so you go to the put side, Yeah, you got some numbers there, but you got a 14,000 anywhere? No. You got 91, but ain't a lot of money on that. I mean, really, all your money is on the 90 calls. You
Right.
take 4,677 times $640. Holy smokes, is that a lot of money? And you say, well, what about the 100 puts? Well, obviously it don't matter today because they only had 136 purchases, you see, or 138.
Yeah.
So
At the
the point
90
of-
strike, at the 90 strike, that's almost $3 million right there.
Yeah, see, they don't spend $3 million and they lose. They manipulate, they make it happen, they coerce it, they force it, they push it, whatever you want to call it. The thing is that when they have money on the line, they do whatever it is. It's a concerted effort. Now, do I know that for sure? No. But the thing is that I noticed that in my experience is that when I see 6 million, is that what you said, 6 million?
3.
$3 million being spent. Isn't it funny? That's the highest I've ever seen MU go in a day. $6.14 one day. Non-earnings. That's insane. It don't even move that much on earnings.
Well, here on the 95, it's 3.6 million.
Yes, that's what I'm trying to get at. Is that this? So I actually do like to look at both, but let's go ahead and go look back at your green line again. So this is very common, and I try to teach you this, is it's the 10 a.m. reversal. It determines if it's going to go up or if it's going to go down. So at 10 a.m. you got in, you put your stop underneath the green line, you would have been in the clear all day. There's no way you could lose. I have people email me and text me sometimes. They say, your system sucks. Your system doesn't work. I lost money. You tell me, you look at that graph right there and tell me if you put a stop under the green line, how you could have lost any money today.
Right, exactly.
I'm just saying. So the key thing is with the app gets you in. Discipline makes you go ahead and stay with the trade. Now, the thing is, you could have got out at 11 o'clock and made very good money. Probably would have been almost as much as you would have got at 3 o'clock. But the thing is, you could get out at 11. You could have got out at 12. You could have got out at 3. You could have got out at 3:30. The point is that, yeah, the thing is you got to do it because it's all risk averse. What do you want to go ahead and wager? What's your appetite for tolerance? Do you want to be all in? Do you want to go ahead and make 100%, 200%, 300? I mean, every one of those trades on MU, you should have made 400, 500, 600% today. So do you want to make 100% and you get out? Everybody's different. So.
Right. Yeah.
Wow.
Yeah. Well, and you can't rely on bias and front load these things. You have to let it trigger. Because I have a feeling that's why people are saying, oh, I lost money on this trade. If you're jumping in before it actually breaks the line, for one, you have volatility, so you're paying for that. And two, you have no real stop. I mean, if you wait till this breaks above, here's your stop line. But if you're in before that, technically you're waiting down below, where the 5-minute low is for a stop, and that's pretty far away. So
yeah, I'm going to tell you another thing you can do. So I learned this from my friend Tom Busby, is that it's the only way he trades. This guy's a multi-million-dollar trader. This is the only way he trades. I said to him, that's the stupidest thing I've ever seen in my life. That makes no sense to me at all. But the thing is that the way he does it made no sense to me. This makes more sense, but his logic makes sense, okay? His logic is the same logic as this. What it is that he used a mathematical equation, a computer, to determine that if it goes, like in terms of MU, if it goes over 92, he would put a buy order in. Now, I said to him, well, if you think it's going up, why don't you buy it at $90? Why would you put the buy in at 92? The point is, I couldn't understand the logic because it had to go so far up before he would jump in. Well, the issue is with the 5 minute, and you could do this on TD Ameritrade, and a lot of very successful traders do this, is they condition their buy order for when it is above the 5 minute high. So let's say whatever that number is, if you could tell me, what's that number at 10:05, 10:10?
So 10:10.
Right there. Yeah, that one right there.
Low of 92.25 and a high of 92.61.
So, and what was the 5 minute high?
92.13.
So the thing is that you could allow yourself some wiggle room and set your buy order at 92.25. Follow my logic?
Mm-hmm.
And then the thing is that it only triggers if it gets to 92.25. This is how a lot of successful people do it. So the issue is we did the app to give you a tool to be successful. That's it. The 5 minute rule is a successful, proven strategy. The reason being is gives you a stop loss to get out at break even. So you're going to win on every trade, because if you stopped out at a break even or a small loss, that's still a win. Where you lose when you go ahead and hold and you go ahead and have huge losses, then you gamble to try to go ahead and win it back, which you never do.
Right,
So.
exactly. Yeah. And that's where emotions start creeping in.
Oh yeah. I mean, it's all like, I want my money back.
It's, you know what, it's hard to take to accept a small loss for many people. It's hard to respect your stop losses and move on to the next trade, because it's almost like you were wrong. And that's a hard concept or a hard habit to break.
Yeah.
To tell you the truth.
Well, I'm gonna let you go, Brian. Cheers to the Apple iOS. It's done.
I think it's done.
Final.
Yeah.
It's in testing.
Yeah.
It's happening.
I think
We're
it's
doing
done.
it for you guys.
Okay, doke. Thank you, everyone. I hope you enjoyed it, and I hope you gathered quite a bit of information from this. Watch it, take notes, watch it again, because yes, this is the heart and soul of this trading strategy. So, thanks, everyone, and have a good night.
All right, we'll see you.